In today's video, we will be discussing about risk-based internal audit, which is a very common methodology of carrying out audit engagements. So let's start with our today's presentation, which is basically about how to do risk-based annual audit plan. It is one of the most crucial and important element of the internal audit activities, and if your planning is good, then your execution will be more meaningful and the end results will be more beneficial for the company. Having said that, it's despite the fact that it's one of the most crucial, but it is the most complicated and most confused area of internal audit. So I will try to give you the basic understanding of how to carry out the risk-based internal audit, and plus I will also give you things which you can apply from the day one in your internal audit department. And these are the bare minimums, and if you want to take it further to the next level, your planning process, you can take it and you can invest more in yourself, in your knowledge, and in the resources, which means like automating the internal audit department. But this is the bare minimum which you are supposed to know, and by which you should form your annual audit plan accordingly. Just to give you a brief background of myself, I'm the head of internal audit department, but I've worked as a head of risk as well, but not officially given a title, but I have developed and established risk management department as well, part of my job. In addition to that, I have multiple accounting and auditing certifications. I started my career with EY and then moved to telecom, then moved to diversified group. And for a small span of time, I also worked for a startup, and in private equity is my latest job. So whatever I'm coming up in this presentation is basically based on my practical applied processes and based on the review of multiple internal audit departments across the globe, because I was working as a group internal audit manager, where I had the opportunity to oversee the role of internal auditor in different parts of the world. So these are very practical nature of steps which you can follow, and it's very simple, and I hope by the end of this presentation you will be able to master, and you will be able to make your own annual internal audit plan based on the key fundamentals which is supposed to be there. So let's start. So why we need to have a risk-based internal audit plan at the first place? So risk-based plan is basically one of the requirement by the IPPF. IPPF is the internal audit standard, which is being set by the Institute of Internal Auditors, and which is a global body, which is one of the biggest body of internal auditor, and there are more than 100,000 plus auditors which are associated with them. So this is the industry standard which we have to follow, and as per these standards which govern our audit activities, says that we have to carry out a risk-based audit. The risk-based audit is mainly used because we have a limited resources in internal audit department, and we have limited time span in which we have to carry out the audit activities. So our focus should be mainly to those areas which are more important to the organization, and which, if that thing goes wrong, it might have a adverse and direct impact on the achievement of the organizational objective, which is our main purpose, to serve the company in a way that they are able to achieve their objectives. So internal auditor basically are one of the independent department within the company. Despite the fact that we are independent, we still use our resources for the benefit of the company and to help the shareholders to benefit from the achievement of the organizational objective. So this is one thing which you have to keep in mind. the internal audit standard also says that it has to be done annually. So this is a very high level of requirement which has been put forward by the IPPF, and which doesn't restrict you in doing things the way you want and the things which are more suited to your environment and your organization. But these are just the bare minimum criteria which you have to perform, that your risk-based audit needs to be documented. It has to be risk-based, and it has to be carried out at least annually. And your risk is basically, the focus of your risk should be basically to the one which could be more which could have a direct correlation with the organizational objectives. So that's one of the things which you have to take into consideration, and that's the reason why majority of the job roles advertised for the internal auditors state that you need to have a knowledge of risk-based internal audit. So this is the reason why we emphasize more on risk-based internal audit methodology. So as I have said it to you, that the internal audit have limited resources in terms of employees, in terms of budget, in terms of time constraints, even in terms of capabilities. So we want to use our limited resources and make it in optimal use for the organization. To do that, we need to have a systematic approach by which we can filter out of the entire auditable universe that which area are more important for the organization for current year to focus on. So basically, if you look into this slide here, you will see that we have Audit Universe. What is Audit Universe? It's basically nothing but it's to divide, if you can, the way you divide the entire organization into smaller auditable units, that in itself form a Audit Universe. So Audit Universe is the complete population of the entire auditable areas, which means that if you carry out all the auditable areas of the organization, which is basically the Audit Universe, it means that you can give them an absolute 100% assurance. But then there is a cost, and you don't want that the company is just become an audit company rather than achieving a greater goal. So we just list down all the areas of the entire organization which could be audited, but out of those entire big population, which order to use, we carried out a risk assessment, and based on the risk assessment, whichever is a high risk and a very few medium and low risk, I will tell you in the upcoming slides that why we choose some low and medium risk, but generally we focus on the high risk, and we take those areas and make part of our annual audit plan. So these are the 5 steps by which you can have a comprehensive annual internal audit plan. You need to break down the entire organization into smaller auditable units, which is called Audit Universe, and then you perform a risk assessment on those areas and see, and then you align which risks are more important from the organizational objective and strategy, and you focus on those areas, and then you prioritize among those assignments, and then you draft your annual audit plan. So it's simple 5 steps process, and it suffices the need of the IPPF. So if you follow these 5 steps, it means that you are doing a risk-based internal audit. Audit Universe. So as I have mentioned you that Audit Universe is nothing but to break down the entire organization into smaller units. And how you can do it, there are multiple ways of doing it. You can do it by breaking the entire organization into each department, and within the department each activity, and then you assess the risk or you carry out the risk assessment on each unit of that area. Okay, or else it depends also on which type of organization you are in which country you are in, and what is the structure of your organization. For example, I was fortunate to work with very large, complex, big groups. So in that, I cannot just focus on the departmental risk, because we have multiple companies, maybe 80, 90 or 100 companies in one group. And being a group auditor, we have to ensure that the entire group having a robust internal audit activity, then they are managing risk effectively. So in that case, we used to divide the entire group into different regions, within the regions different companies, within the companies into different functions and departments, and then and from the bottom till the top we carry out the risk assessment. So while doing the departmental or product-wise risk assessment, we come up with the company level risk and then the regional level risk, and then we figure it out which areas to focus, or which countries to focus, or which companies to focus. But generally, the majority of the auditors might not have that kind of complexities or responsibility to work on. So in that case, you can simply go by the department of a company. You just simply take the entire department, and each department become your auditable unit. So, and within the department, if it is too big and complex, then you can break down into 3 or 4 or 5 key areas which may comprehensively cover the entire activities of the department, and then you perform the risk assessment on those areas in order to come up with your annual audit plan. Risk assessment. So risk assessment is a very complex process, but I will try to give you the bare minimum by which you can have the compliance with the IPPF. In order to carry out a risk assessment, you have to ensure whether your organization is a mature organization or immature organization. What I meant by risk maturity is basically some organization will have a very strong corporate governance process. They will have proper boards, independent boards, audit committees. Internal auditor will be reporting to the audit committee rather than to the management. There will be proper delegation of authority within the company. There will be proper risk appetite statement within the company, and policies and procedures. People will have proper JDs. Everyone knows what they are supposed to do. There will be systems, and systems are robust, and there are effective control. The company have first line, second line, and third line of defense, which means that the first line is the process owner, the second lines are the departments which support the first line, basically in risk management, internal control, anti-fraud department, health and safety. So these are compliance department. So these are the second line of defense. Then the company might or is supposed to have a external and internal audit. So if these characteristics you have within your company, it means that it's a mature organization, and your life will be easy because you will coordinate with your co-partners like risk management department, fraud department, and compliance department to gather the information for your risk assessment. But if you don't have, then your risk assessment will be relatively a bit extensive, where you have to reach out to the people in order to ensure that your risk assessment is comprehensively done in order to come up with the audit plan. So this is what is more important. So you have to assess the risk maturity of the organization. Risk assessment. So how to carry out? There are multiple ways of doing risk assessment, but there are certain factors which we need to take into account in order to be in compliance with the IPPF, that it has to be documented, and you should take into account of a fraud and IT risk. So these are the 3 bare minimum criteria that you have to take into account in order to be in compliance with the IPPF. And there are multiple ways of doing risk assessment, but the bare minimum key things which you have to take into account, I will explain to you in the next slide. So basically there are 5 key components that you have to be mindful of when performing risk assessment. That is likelihood, impact, inherent risk, control risk, and residual risk. So likelihood is the frequency, that how often that risk can materialize, or what could be the frequency of that risk that it can happen. For example, hiring a wrong employee, the frequency might be high, but hiring a unqualified person maybe less if you have put it in a criteria where he has to provide attested documents. So a wrong person might be hired, likely could be hired. So you have to see that what is the screening process, what is the interviewing process, is there is a case-based recruitment process. So in different departments, the likelihood of different risks either be high, medium, and low. So you have to figure it out that what is the frequency or the transaction level within the company for that particular activity. So when you are doing a risk assessment, you have to ensure that what is the likelihood of that incident go wrong. So this is risk. Risk is anything that can go wrong, so which can potentially impact or have an adverse impact on the organizational objective. The impact is the how much it will cost the company, how much it will cost in terms of reputation. It could be monetary or non-monetary, so it could be anything. So the impact is also measured in terms of high, medium, and low. Then inherent risk, inherently how risky that area of business is, or that activity of the business is, that you have to determine. Then we have control risk. So if the company has placed, or if the company placed some controls to mitigate or manage that risk, then is it still a risky area or not? So if the controls are effective and there is a cost benefit analysis, so you will be able to ensure that whether it is after putting the control risk, is it high, medium, or low. Generally what we do to ensure the control risk is by looking at the previous audits which has been performed in that area, and see that since the company has a control inherently on those areas, so what was the rating of the reports. So was it that it was a red report, which means a high risk report, or a medium or a low report. So based on that you can assess that despite the fact that there were controls, but still when the auditor assessed that area, it was high, medium, and low. So I use that as a supporting evidence for control risk. There could also be a possibility that you might have some other ways of assessing it, which is by ensuring that if there is a fraud incident happen in that area, or if there was a compliance issue in that area. So by that also indirectly you can assess whether it's a high, medium, or low in terms of control risk. So after doing that, after putting those, you come up with the residual risk. So whatever is the risk that is left out is a residual risk. So these are the 5 components, and I will just try to explain it to you in a practical way, that how you can ensure whether the likelihood, impact, inherent, control, and residual risk are being carried out on each activity. So here is the example. So you can take for example, you have divided the company into different departments or key major areas of the business. For example, in this case, we have one entity, and we have multiple areas of audit, which is corporate governance, HR department, finance department. HR department, corporate governance, let's take the first example. In that, if you see, the corporate governance impact would always be high, because anything related to governance, if it goes wrong, the ultimate responsible person in front of the shareholders are the board of directors, and in front of the regulators as well. So the impact is high. To go wrong in terms of corporate governance things, it's inherently medium, because generally all the companies have a relatively good organizational structure, reporting line, and proper mechanism to control things. Control risk, basically I come up with if there was an audit performed, or if I have any other supporting evidences by which I can corroborate and I can form a decision that this area has been audited, or this area, despite having the controls, has posed some risk or potential risk to the company objective. So I based on that, I just put it high, medium, and low. In my case, there was an audit which has been performed, and the rating was medium, so I put it medium. And based on these 4 elements, we come up that overall the residual risk is medium. So basically, if you Google it, there is a matrix. I'm not so sure. No, it is not in my presentation, but you will find that if the inherent risk and the controlled risk is medium, then the residual risk comes medium. But if it is high, medium, then there will be again a rating. I think it's medium. So there, how you come up with a medium, high, or low in residual risk, there is a matrix. You can easily find that risk matrix within the, if you do research on the internet. But the one which I use, I will share you in the next slide. So here is the example of a matrix which you can use to come up with the inherent risk. So if you have a controlled risk, which is either low, medium, or high, and then you have inherent risk, which is again either low, medium, and high, then you can use this matrix in order to come up with the residual risk. So this is one of the kind of a matrix which you can use. I just quickly download during the presentation just to give you a snapshot, but there are multiple risk matrices which you can use. Either you can use numbers, you can plus, you can use addition to come up with a high, medium, and low. You can come up with by multiplication. I generally prefer to keep it low, medium, and high. Reason being, at the end of the day, it is judgment of the auditor. No doubt there are quantitative factors which we have to take into account, but not all areas could be quantified in terms of potential risk. So there is a huge element of judgment which is being used. So therefore you can use high, medium, and low. But if you are more good at numerics and if you feel more confident into it, then you can use numerical numbers as well in order to come up. Just to give you a quick example, for example, if your control risk is low and your inherent risk is low, so your residual risks also become low. In that case, it is not a high priority for you to focus on those audit engagement. Contrary to that, if your control risk is high, your residual risk is high, then it become a high risk, residual risk is high. In that case, these are the assignments which you are supposed to take into account in your annual audit plan. How to do prioritization? Generally, I keep like almost 70% bare minimum at the high risk areas part of my annual audit plan, and the remaining 30% I keep for medium and low risk as well. Why? Because I'm a human and I can make a wrong judgment on my risk assessment. So I don't want, in order to overcome the judgmental error, I just try to keep some medium and some low risk as well, based on my own preferences, that which might be more important for the organization in terms of their objectives. So you can also take that into account rather than having 100% high risk, because then the entire responsibility or onus comes on you, that your assessment is so concrete and so well done that there is less chances of an error. However, I strongly believe that the risk assessment is very there is a huge element of judgment, so therefore try to take some proportion, maybe 20% of your annual audit projects in medium and low as well. So by this, you never know, but the one which you take it as medium and low might come up with a high possibility that these are the one which could have materialized into negative risk to the company. While doing this, you might encounter a situation where you will find that there are too many high risk areas which you cannot plan throughout the year because of limitation of your personnel, your staff members, and time constraints. So in that case, you can use the topmost priority one in a list A, and the second 1 in the list B. While you will take your list 1, which is category 1 assignments for the audit committee or the board to approve, but you will keep that list B in order just in case if you are unable to perform any audit during the year in the list A. Why is that? Because there are at times situation where the management is busy, they have limited resources, the person in that department who is key responsible, he left the company, or there is a dramatic change going on, or there is a business need due to any other circumstances you might not be able to perform your audit engagement. In that case, you can pick and choose audit from the list B. And since you might have already done the risk assessment and everything on those areas, so you will have more confidence to share those workings or give those reasoning to the audit committee or the board that why you have chosen such kind of, obviously with the approval of your approving authority, you will embark on those assignments. But since the work has been done, the planning part, so you will feel more confident and you can quickly jump over to those assignments. So this is one of the techniques which we were using, so you can also benefit from this. Otherwise, you don't need to have a list B. You can just stick to your one category A audit assignments and just take it to the audit for approval. So this is the end of the annual audit plan. So the draft audit assignments, you just take it to the audit committee or to the board, or in case some companies where it is being the responsibility is being given to the management, which is not the right practice, but it happens, so you can take it to them, and based on your risk assessment and your annual planning process, you can confidently present with the workings, obviously. And while doing these things, you have to keep into mind that you should be able to provide with a you should also consult with the management before presenting those assignments to the audit committee. Why? Because sometimes they have some special requests, so you can take into account. So just keep certain proportion of your annual audit time or resources free for the special assignments may be required by the board or by the management as well. So by this, I hope you will have a basic understanding. I try to keep it very simple and quickly I try to finish it up, because not to make this presentation a 2-hour presentation, which I would have wished, because there are so many nitty-gritty details which could be talked about, but I try to keep it simple and precise. So if you benefit from it, please do share with other people and also share your feedback. And thank you for watching this entire video. Thank you.